What's going on, family? If you've been following the housing market whatsoever in the past 2 years, you know that there's been tons and tons of people calling for a housing crash. Well, there hasn't been a housing crash just yet. But according to an article from Goldman Sachs, these four cities, in their opinion, will face 2008 levels housing crash. Let's jump into it. Welcome back, those of you who are joining me again. And if you're new to the channel, I am Sir Ashley. I am a realtor and an investor right here in the Carolinas. And on this channel, we talk about real estate and personal finance. And if you have any questions about either real estate or finance, please leave a comment, leave a question. And if you're thinking about moving to the Carolinas, reach out to my team and I, because we would love to help you in your transition in buying, selling, or investing in the Carolinas. Now, home prices have been falling since June of 2022, and some of that has to do with seasonality, but a large portion of that has to do with interest rates. Interest rates started off 2022 in the low threes, and they've been quickly, very quickly going up. And I believe the highest they got was in October. They were around 7.4% for a 30-year fixed rate. Now, if you're unaware, that added a substantial amount of money to your monthly mortgage. Now, if you follow the channel, you've heard me say, people don't care about home prices. Hear me out. People do not care about home prices. They care about their monthly mortgage. So long as their monthly mortgage is affordable and fits comfortably in their budget, you won't see too many people complaining about the home prices. Well, in the beginning of the pandemic, home prices went up, but interest rates were very depressed. Actually, almost lowest on record. I think the lowest was back in August of 2021, where it was around 2.4 or 2.6. Don't quote me. That is a big contrast from October of 2022, when you saw 7.4. So that means affordability went from being some of the most affordable homes in the past 20 years in 2021 to where housing became the most unaffordable it's ever been. Here, look at this chart from Goldman Sachs where it ranks the housing affordability. And you'll see, back in 2021, housing affordability was the best it's been in over 10 years. But fast forward that to a year and a half later, and we have some of the worst affordability ever. So quickly, I have to say, if you listen to all the crash videos that told you not to buy in 2020 and 2021, they did you a huge disservice. If you listened and did not act, they did you a huge disservice. They cost you a ton of money in affordability, because waiting has only caused you to have to pay more as far as the overall price. But the most detrimental part of waiting is the fact that even similar priced homes cost significantly more, $600, $700, $800 more per month, because the interest rate more than doubled. Now, let me take you to this article where Goldman Sachs highlights the four cities and some of the challenges we face as a nation. Now, this article was released January 24th, 2023. And as I mentioned previously, it talks about how home prices have been falling since June of 2022. And they think that it will extend through 2023 and even into 2024. And they start off the article by saying, attention homeowners and real estate investors, Goldman Sachs has bad news. Home prices are going to fall further into 2023 than they had previously thought. Now, the initial impression is that once we get past this winter timeframe, home prices will begin to level off, if not pick up, come spring and early summer. That's what I'm anticipating, but let's see what this article has to say from Goldman Sachs. In a note to their clients in early January, Goldman Sachs said they believe that the U.S. national home price will decline 6.1% year over year by Q4 2023, and that is down even further from their estimation of 4.1% in the same period. Now, to put that into context, home prices went up over 30%, and in some areas over 40% nationally in the past 2 years. So they're saying home prices will decline 6.1% year over year by the end of 2023. So that's not putting a huge dent into the appreciation and increase that took place in the 2 years prior. But let's move on. Goldman Sachs also says that the total peak to trough in home prices will be about 10%. Now, I'm not sure about you, but I don't see a 10% decline in prices as a crash nationally. Now, I see a crash as 20% or more in home prices. But even with 20% declines, that still puts us back in 2021 levels. Let's move on in the article. Now, this is very telling. Goldman Sachs expects mortgage rates to rise to 6.5% by the end of the year, 2023, before falling to 6.15% in 2024. Now, I don't have a crystal ball. I don't know exactly what's going to happen. I do believe mortgage interest rates will be lower. I believe we'll be in the fives by the end of 2023. And presently, we are at 6.2% for a 30-year fixed rate. But just last week, it was at 6.01%, 6.04%, I believe. And we have been trending down since October of 2022. Now, if mortgage rates stay elevated, that will have a huge impact on affordability, or continue to have a huge impact on affordability, because in my personal business, I've seen the market has slowed down drastically as far as people wanting to buy or people wanting to sell when mortgage interest rates are about 6.25% or above. If they are below 6.25%, you see more people engage and active in the market. And there's ways in which, even if the rate is 6.25%, for a 30-year fixed, there's ways in which you can get your mortgage rate into the fives, if not the fours. I have clients doing that successfully on the daily basis. Reach out to our team if you're interested in learning how. They also show this chart regarding housing affordability, how it's the worst it's ever been. I touched on that earlier in this video. Now we're getting to the good stuff. The 4 cities in which they see a 2008 type housing crash. They are San Jose, California, Austin, Texas, Phoenix, Arizona, and San Diego. They see a peak to trough decline of over 25% in those markets. Now, when I talk to you about the housing market and real estate, you have to take into account that real estate is hyperlocal. So you cannot base your decisions on what you want to do, whether buy, sell, or invest, on what's going on nationally. You have to see what's happening in your locality or where you want to buy or invest or even sell. And not just the city itself or town itself. You have to see what's happening in that zip code, on that block, because at least in Charlotte, and this is true for DC and other areas that I've lived, the housing market could be doing drastically different things as soon as you turn a corner. I know it seems weird, but you could have a high demand area right here, but right around the corner, you see houses sitting on the market for months and not be able to sell and have to lower their price. So team up with some professionals who know the market, and I suggest that you study the market yourself so you know what you're looking for. So when a property does come on the market, you know right away, hey, this looks appealing, because you've been studying the market and knowing what's been happening around the area. So Goldman Sachs thinks there's going to be a 10% decline in prices from peak to trough, so about a 6% decline this year. Other firms, Morgan Stanley believes there will be a home price fall of about 4% in 2023, so that is a total of about 8% peak to trough. And Wells Fargo thinks there will be a decline around 5.5% in 2023, bringing the total to right around 9.5%. Now, the chief economist from KPMG sees about a 20% decline coming in 2023. Now, I'm not saying it's impossible. I'm just saying we have never, ever seen a decline in home prices by more than 9% in one given year. So for somebody to say that nationally there will be a decline in home prices by 20+%, I think there has to be some extremely extenuating circumstances, because even during the Great Recession, that didn't happen. When you had millions and millions of homes for sale just sitting on the market, you did not see a national price decline by 20% in a given year. You didn't see a national price decline by 10% in a given year. So in today's market, where there is limited inventory, I definitely do not anticipate a 20% decline or even a 10% decline in 2023. In my opinion, it all comes down to affordability and what you can afford to pay on the monthly basis. And we don't see prices coming down, so that would mean interest rates will have to level off or come down, or you can partake in some creative strategies that will allow you to have a cheaper monthly payment. I'm Sir Ashley, your real estate advisor. Be sure to like this video and comment below. Let me know your thoughts regarding the housing market and what you think is going to happen. I appreciate you. Talk soon.